Shut up and sit down.
Alright everybody, welcome back to Rebel Trading Group Podcast episode 29. Today's date is July 18, 2018. Survived Friday the 13th. It's Wednesday, my dudes. What is up, everybody? My name is Nathan Oliphant, and with me, as always, is the gluten-free Jason Bessick.
The GF JB.
Girlfriend Bessick.
That's what's up. What's going on, Nate?
How are you, buddy?
Doing all right, man. Doing all right. Tired. The huge.
Of course.
Exhausted from being exhausted.
How are you gonna make money if you're not trying?
That's true,
Trying makes you tired.
I feel like if you're tired, you're doing something right.
Yeah.
For the most part. I guess there's outliers, but
yeah,
if you're wearing yourself down to exhaustion, you're probably doing something right.
making money.
Making money,
Making
hopefully.
money is exhausting.
But more importantly, Nathan, we're saving money.
Yeah.
We're not working hard to spend and play harder. We're working to build that nest egg, buy that freedom.
Yeah.
So I don't have to fucking work anymore. And that's what this game is.
Let me hear the numbers, please.
Let's go ahead and hit the numbers. I'm gonna change it up on you today, just because I haven't.
Ooh, let me hear it.
We're gonna start with Bitcoin. Down a little bit for the day. There was a spike up across cryptos for a little bit, but we are selling off in the mid-afternoon here.
What is the
late
price?
afternoon.
Because the last price we were at was in the 6,000s. What's the
Oh
price
yeah,
now?
well, definitely a significant move up from a week ago. We were at 7,350.
That's insane. You got into the 7,000s, people.
And just a week ago, on July 12th, we were at $6,164.75. So we're looking at about a $1,000 move, 15% in a week. So nice movement there. So sideways day, but each day she's just popping up more and more. And we're going to revisit cryptos later. It's going to be something that I would like to talk about, of course. Your other numbers, let's go into the equities. Dow Jones up 79 points, NASDAQ down. I'm not even going to call that a half a point. Down a half a point. S&P up at 6 points, so pretty flat across the board. We popped up this morning and then just stayed sideways, basically since like 10:30. So yeah, mixed earnings. You know, some stuff is really just crushing it, and some stuff is just getting crushed. Netflix, significant market mover, took a little bit of a beating. I guess her subscription numbers were down.
Yeah, they were bouncy.
Yeah, very, very bouncy. And that's one of those things about growth stocks. Like, this is what happens. This is why people say Netflix is risky, because eventually this happens. Let's see. I'm going to pull up the week chart here. Down $40, 10% in a week.
It's not good.
Ugh, ugly. That's ugly.
It's not good.
So, yeah, it's a high flyer. I remember trading Netflix. I bought it at 83 and it quickly shot to 89, like within the same day. This was like in 2016, and I was like, well, shit, I'm gonna take my money and run.
Are we shorting Netflix?
I don't know, bro. I don't even touch it.
Strangle.
I just don't touch it.
Strangle the volatile bitch.
Now that is an option. That's an option. It's a scary one, but it'd probably work out in your favor, to be honest. If you are a high flyer growth motherfucker, you might be looking at some discount on Netflix. It's had a 10% sell-off. Personally, I still wouldn't buy this unless it sold off about another 50%. It's all based on hype and excitement. They don't have assets. They just have, like, their contracts, and I don't know. I went to college for this shit. I could talk Netflix all day. I'm not going to, but we'll save that for a digress-isode.
Digress-isode?
Netflix. Oh, yeah.
Do you hate mowing the lawn?
By the way, I hate it. I felt like last time we really digressed a lot, but when I went back and listened to it, I was like, oh, it kind of worked, though. It all kind of worked, and it sounded like nonsense in my head when we were talking, but
I guess so.
That's besides the point. So anyway, Netflix major market mover for the past week, keeping us kind of bogged down from a true rally. Other than that, not much going on.
Oh, you want that market news with Nate? Boo-doo, boo-boo, boo-boo.
Go ahead.
Did you say the markets?
News with Nathan Oliphant.
Did you give the market numbers?
I sure did.
Oh God.
Gotta open up your earballs.
God, I need to clean them. All right, market news with Nate. I don't know, not really much is going on. You know, we got Putin. We're talking to Putin. We got
Yeah, so Trump met with Putin, right?
yeah, we got Mueller going on. We got Trump contradicting himself. So this is fun. Hang on, everybody. It's gonna be a fun ride.
Is this a hodl?
We're reaching our highs that we were in February, man.
We're coming back, and nobody's really talking about it. I feel like we're still kind of in a correction mode, but we're getting back there.
Yeah, a correction mode. I like that.
We're getting back there.
I like that correction mode.
We're an auto correct.
Mm-hmm.
But yeah, I've noticed that too, especially the Nasdaq.
Pay attention. We're in earnings still. Big banks are reporting. J.P. Morgan did well. Bank of America did well.
Morgan Stanley today.
Morgan Stanley, did they do good?
She was on one of my top mover alerts. Let me pull her up.
Let me see what Bank of America did. I'll pull that for you.
Morgan
guys.
Stanley up 2% today, so modest day, but 5% for the week. Down for the month. Interesting. Morgan Stanley is one of those big corrupt, super corrupt.
Bank of America met earnings. I don't know. I guess they raised guidance or something. The Federal Reserve allowed banks to increase their dividends, and a lot. That was in a lot. I think that was in a lot of dividend. That was in a lot of earnings calls. Especially, I listened to J.P. Morgan Chase, and that was really one thing they did highlight was
doubling the dividend.
And they were going to increase buybacks as well.
Do you think that's to limit like the size of these banks?
It was a stress test. I think it was like survivability.
Like if they couldn't pay high dividends and stuff?
I think if they...
Like, I'm just wondering why that was
I don't know. I guess it was just like a limit. Just like they had to do something to stop them.
There had to be something behind bankers and not wanting to give them too much control or monetary power. I don't know. It's weird. It's like how real estate companies have to pay out their stuff in a dividend, but it's like the opposite. I don't know. I don't know.
So yeah, pay attention to earnings. Look at Google earnings calendar or something. Maybe play around those companies. Be careful, because if they miss estimates, that's it. Stock's going down.
Oh yeah.
A lot of times meeting
sometimes if they meet and just beat, sometimes if they just beat just a little bit, it goes down. I hate it. It bugs me. It's not the way this is supposed to work.
Like, we did what you want.
Yeah. Like, what do you want from me? I made more money. I'm sorry.
So, yeah, just,
continues to be a news-driven market, doesn't it?
Yeah, pay attention
to earnings.
Continues
to be whatever's going on with Trump and earnings.
I think aren't earnings like mixed, or where are we on earnings? Do you know?
For the most part, they seem pretty mixed. They seem above average, just I would say slightly from what I'm getting. I'm getting a lot of like, I think it was Johnson & Johnson. I don't know the exact numbers. It was something along the lines of expected $2.03, got $2.06. You're seeing a lot of like very small beats, maybe 3-4% earnings beats. It's nothing crazy. So kind of mixed though. And then you're getting like a couple misses here and there. But nothing like huge, no huge outliers, especially any sectors.
Except for Netflix.
Well, I mean, if Netflix, could the rest of FANG go with it? Facebook, Apple, Netflix, Google, Amazon. That's the question. So, anyway, is that about it?
Yeah, that's it. Do-do-ba-doo.
Do-do-do-do-do-do.
What do we got with our schoolwork today, buddy?
Today, your homework. It is time for your market terminology. Today,
take notes, students.
What is a hedge fund?
Oh, okay. You want that? You want that from me?
I'll take it. A hedge fund is a fund, a closed business, if you will, that is open to people only called accredited investors. It's only open to accredited investors, and in order to be an accredited investor, you have to make It's something like you have to have your assets more than $1 million for the past 3 years or make X amount of dollars. You have to be in the top 1% for sure. And that's because hedge funds use very risky tactics and strategies and extreme leverage in order to make very large returns very quickly. They will do stuff like day trading, day trade short selling. They'll borrow money and leverage with futures and options. Hedge funds are now starting to get into cryptocurrencies, and they use very aggressive tactics to make all the money that they can. And the worst part of it all, if it doesn't sound bad enough yet, the worst part of it all is that these hedge fund managers, they only make money based on the fund, and it's a huge fee. It's anywhere between 15 and like 40% of all the profits that the fund manager and the management team will keep. And if they lose, they're not responsible for any of the money. So not only will they take your money, but they will use leverage and debt and margin on your borrowed dollar and do everything they can to try to make more money, because they don't care. It's not your money. It's not their money that they have to lose. It's your money. And you sign these waivers and contracts saying that if you lose everything, you can't sue him. Very few of them do well. You do get your outliers, though. You get your Bill Ackermans and your major hedge fund managers, George Soros, that can just outperform the market every year, year after year, using all kinds of complex instruments and strategies and global markets and all kinds of shit we never even heard of, like warrants and swaps, craziness that you don't even want to touch. So to boil it all down, hedge fund, very risky. I wouldn't touch them. I wouldn't even look at them. I like to be my own hedge fund.
Oh,
you know?
Yeah? You mean
I like to
hedging
be my
your
own
portfolio?
No. Well, that's not to be confused. A lot of people will confuse the term hedge fund with like hedging. Hedging is completely different. It's a concept that protects your portfolio against downside. A hedge fund has nothing to do with hedging. A hedge fund, it's a very complex. I don't know why they have those kind of crossed over each other in the
Hedge funds
investment
don't
world.
hedge their own funds.
Oh, they do, but
Yeah.
it's not a sole specific purpose. Like they're not saying, hey, we're going to take all the money because we're going to hedge everything. That's not what the fund is. They're called hedge funds for whatever reason, but a hedge fund's main objective is to make as much money as possible using whatever means possible, unlike an ETF or something like that. But then hedging is protecting your own portfolio to the downside. And if you'd like to listen to that episode, we have it. I forgot the number. I'm going to say it's in the ballpark of
Link it.
5 or 6.
Link that motherfucker.
I'll put the link. Let me write that down so that I put the link in there. So, link for I think it was Playing the Downside. How to protect your portfolio in case of a downturn, market correction, or crash. So that is your market terminology. It's a hedge fund. If you have any questions, comments, concerns, insults, suggestions, or corrections, please email me at Rebel Trading Group. That's with 2 G's.
2 G's.
At gmail.com. Rebel Trading Group at gmail.com. Or message us on Facebook or YouTube at the Rebel Trading.
Oh, we got a new intern.
I wish.
Yeah.
So, yeah.
He'll be here soon.
Nathan. Any last points you want to go over real quick? Anything you want to get out into the airwaves before we jump into today's topic?
Let's get it.
You want to just dump it?
Sure.
Today I have a little bit of a twist on things. Just a little bit of a twist. Today I want to talk just a little bit. Let's go to bond basics. It's not something that we really talk about. We are equities investors. We like to play the stocks and the funds, but bonds are a very profitable instrument, and they have a lot more risks. They have a lot more rewards. They have a lot more safeties to them. So I just kind of want to brush over some of the broad things, or some of the broader points on them. So let's just go ahead and start. Most people who get into investing, they probably couldn't tell you the true difference between a stock and a bond.
Wow.
Honestly, like I really couldn't maybe 5 or 6 years ago. I didn't know like what the true difference was. I know that they acted differently, but Nathan, tell me real quick the difference between a bond and when I say bond, I'm mostly talking corporate bonds.
Oh, you want corporate bonds? Let's talk about all bonds.
We can talk about all bonds, but for the most part, I generally talk about either the Treasury or the corporate bonds. I don't talk munis or anything like that.
Why don't?
So
Why don't you talk about munis?
we will. We'll get to it. We'll get to it.
Excuse me. I'm sorry.
We will. We will.
Sorry.
We're gonna touch it very lightly, very gingerly.
You want to know what corporate bonds are?
So no. Well,
This
tell me the difference
okay.
between a bond and a stock.
All right. So let's say we're talking about company X, or let's just say Apple.
Mhm.
All right.
Use Apple as an example. Everybody knows who Apple is.
A bond is exactly what that is a bond between you and the company. You're giving money to the company, and they will eventually pay you back at some point. That's the bond you're making, right?
Correct.
That,
Basically, sorry. Go on.
that bond is favored more than the stock and preferred shares.
Mhm.
Um, if that company happens to go bankrupt or something, the bondholders get paid first. So if
Mhm.
that poses less risk than preferred stock and common stock.
Mhm. There, another great point to bring up is that bonds are instruments of debt. So rather than going to a bank and saying, "Hey, can I borrow $100 million?" they go to the public and say, "Hey, look, we're going to give you bonds, and if you buy these bonds, you'll become one of our bills that we have to pay at the end of every month. You'll be right up there with keeping the water and the gas on."
Yeah.
So they're instruments of debt rather than instruments of equity like stocks are. When you own stock, you actually own a piece of the business. When you have a bond, you don't own a piece of the business. They
Is that
just
so?
happen to be indebted to you.
I guess
It's
so,
true.
I guess you're right. Yeah, if you think about bonds in general, what they are.
You would take equity in the form of bankruptcy, and as assets get liquidated and money gets brought back into the company, then they pay off those bondholders. I guess at that point you could say you're kind of getting equity, but your debt it's just like your car. Like when you borrow money from the bank owns the title to your car. And when you pay them off and you pay all that money back, they'll give you the title to your car. It's the same thing with a bond. I let Apple borrow $10,000 from me. They're going to pay me until I recoup that $10,000. And that could be over the course of a year. It could be over the course of 10 years. There's JCPenney 100-year bonds.
Gross.
Gross.
Kill me.
So that's the major difference. Bonds are a little safer in that regard because they are the first person's paid if a bankruptcy were to happen. Some of the downsides, they don't have a lot of upside potential, meaning Apple stock goes up and up and up. A bond, not so much. There is price appreciation. It's a little complicated to kind of discuss, but bonds do move. But for the most part, for the sake of this conversation, bonds don't have much upside potential. You won't double, triple, quadruple your money with bonds.
A little bit back, but like the price will go up or down
based on
according to the company.
Yeah. So, another thing about bonds is bonds have credit ratings. Just like you can look at a stock's past performance, and you can go back and see how did it do during the recession, how did this dividend get paid out, was it all this and all that. The credit ratings are set by companies like Barron's, Standard & Poor's, the S&P, and Moody's, just to name a few of them, and they give ratings between like AAA and I think it goes all the way down to single C. And then there's like B+, double B+, and it gets kind of complicated. But that credit rating gets attached to every company's, and it goes based on their cash flows and how much money they bring in and the likelihood of them being able to pay you back as a bondholder. The higher the credit rating, the lower the interest rate. So, for example, to kind of break that down, it's the same as if somebody wanted to go to the bank and take out like a car loan. You need your car. You just sold your car, so you need to buy a new one.
Yeah.
Go to the bank and they say, "Hey, you have a 750 credit score. We're going to give you a 2% rating because we know you're probably going to pay us back." But then you got Joe Schmo day trading cryptocurrency out there. He's like, "Yeah, I'm making ends meet, but." The bank goes, "Yeah, you have a 603, so we'll give you the loan, but we want to charge you 8.5%. And the bonds work the exact same way. The lower the credit rating on the bond and the company, the higher the yield. It only makes sense. So that's something I kind of like about bonds is you can kind of pick how crazy you want to get with it, just like stocks.
You mean the higher the credit rating?
The higher the credit rating, the lower the score,
Yeah.
or the lower the percentage, the yield.
Yeah, it's less risky.
Yeah. But the lower the credit rating, the higher the yield.
What about more risky?
Yeah. So, I mean, it's one thing if you take a loan from a biopharmaceutical company, or you buy, not take a loan, but you buy a bond from a pharmaceutical company, that's a startup, and then there's also the difference if you buy a Starbucks bond. One's going to pay 2% over the course of 3 years, and one's going to pay 12% over the course of 3 years. And it all depends. It all depends. There are also various types of bonds. This is where I kind of wanted to brush back into that.
Various types of bonds.
We were talking about corporate bonds, bonds issued by companies. Say, hey, we're looking to raise $100 million. We're issuing bonds worth $20,000 at 3% interest for 5 years. But other entities that are not publicly traded companies can also get bonds, such as
Municipal
Uncle Sam.
Or
Uncle Sam himself.
Or the
He
state.
needs to take a loan all the time. He's
Or the
always
city.
looking for a loan. Or a city, a county. Maybe it's a public school system. Maybe it's a toll road bond.
Buy those bonds.
There were war bonds, 1940s. It was all about buy your war bonds, support the country, buy the war bonds.
We should buy trade war bonds.
Here's a fun little fact. I don't know if you know this, Nathan.
I
I
love
hope.
fun little facts.
Here's history for you.
Here we
And
go.
now history with Jason Bessing. Ding, ding, ding. The stock market actually started from people trading Civil War and railroad bonds.
Wow.
Underneath, I forgot the type of tree, but it was underneath a tree, which is now like Wall Street. But they would meet under this tree during certain times of the day, and you could go there and you could exchange your bonds, and people would buy them cash. You could sell, buy, and sell, and then people started bringing other shit. Well, I'm going to bring my gold here. I'm going to bring this, and then the idea of the companies, and then General Electric started, General Motors and Ford, and it really just kind of expanded from there. So it all started by trading railroad bonds. That's how this whole market financial thing, that's how E-Trade came to be where it was. It's crazy. A little mind blowing. So that's just a little fun fact. So that kind of brings it.
Municipal bonds, I'm not sure about T-bonds, but municipal bonds are tax-free.
Double tax exempt.
Isn't that insane?
That's I don't know if it's every single municipal. I don't know the exact. I'm not a big bond guy. Every single municipal.
Yes.
That's
State
beautiful.
And national, federal.
So that means double tax free. So tell me double tax free.
You don't. The interest that you make does not get taxed at all, in or out.
In or out. So the state cannot take any of the taxes, and the federal government cannot take any of the taxes. When you are filthy rich, municipal bonds are what you own. You keep the cities going. That's how you buy all these judges and mayors and stuff. But that's a whole different conspiracy podcast that I'm not going to get into. Municipal bonds. Have you ever invested in a municipal bond?
No, how much do they cost?
Bro, I couldn't tell you. They vary. There's some that are just like treasuries. You can get $50 bills. You can get thousands, 50,000s, 100,000s. It really depends. And you can go by state. You don't have to live in that city. I heard there were a lot of people that were kind of like doing the Detroit bond thing.
Gross.
And that hasn't really worked. You got to remember, when you're getting these bonds from a city, you're also going with the trustworthiness of a city.
That's why I don't want to be president.
A city where when crime is going up and the economy is going down and the standard of living is going down and education is going down and drug use is going up, why are you going to buy bonds in that city? They're struggling, clearly. And if they go bankrupt, oh well, sorry. Puerto Rico's a fine example of that.
Would you invest bonds in Puerto Rico?
No.
Because they're not getting paid.
I wouldn't do it then, and I wouldn't do it now. I don't know the true story of Puerto Rico and how their bankruptcy came to be. I think that was like relatively soon, like 2012, 2011-ish. Puerto Rico went through a whole financial crisis, and they have issues over there too. And all their bonds went kaput,
Kaput. See you
kaput,
later.
and they were yielding over like 9.5% for a muni, for like double tax exempt bonds. That's why people were flooding into them, and they all got their asses handed to them.
See you later.
So it can still be an ugly game. It can still be, because if that company goes under, you're probably not gonna get your full principal back. You might get like 37 cents to the dollar.
I think bonds are boring.
They are boring, but you know what they say about the bond market? They say it's the smartest market.
It's the safest market. I'm sorry. Say it's less risky, but
well, in addition to that,
you get your money back. It returns to par. Like you get the investment back plus any interest it makes. Sometimes it makes less. Sometimes it makes more.
Mm-hmm.
Right? It always pays, right? It always pays.
As long as you hold it till par, the value of the bond might change. So that 10,000 might go to like 9,900, 9,800. It might go to like 10,400, but by the time that bond hits its maturity date, it will go right back to 10,000 because that's your agreement with the company. So there is bond trading. It's illiquid. You got to really know what you're doing. And plus, they call it the smartest market because who is buying bonds?
For real, dude. I'm not buying bonds.
It's Goldman Sachs, Merrill Lynch, wealth management portfolio. Like those, institutions are buying bonds. Retail investors, not so much. So that's why they say it's the smartest market. And it always reacts before the stock market.
Yeah. Well.
Interesting, though.
Yeah, interesting. It reacts to the Federal Reserve.
So, yeah, that's another point I want to get. So, you also have your treasury bonds. And treasury bonds are the Uncle Sam bonds. Every what do they say, the big short? Yeah, bonds. You give them to your snot-nosed kid when he's 12, and maybe when he's 18, he made $5.
How much do bonds generally cost?
You can buy different denominations of them. I have 3 $50 bonds chilling in my safe. I mean, I've had them since 1993.
Are they making money? Yeah, they are.
They've made like $4 a piece. Not much.
What? How is that possible?
I mean, $50 on like a 10-year bond. Or no, I think it's a 15-year bond. No, that's a lie. It's a 30-year bond.
Are you letting that shit sit?
Mm-hmm.
That sit shit.
So there's different denominations. There's also different time frames. There's monthly municipal bonds that yield like 0.25%.
Where do you buy municipal bonds?
You go through the bond desk on either like E-Trade or Scottrade. You go through a more advanced broker.
Dude, I would love Robinhood to open up bond trading.
I guarantee you it is within their works. We'll talk offline.
That talk is restricted.
That talk is restricted. That is classified information. But yeah, no, it is something I would like to learn more about. I actually have a book. I have Corporate Bonds for Dummies. And I've only read through like the first like maybe 25 pages, and I never really picked it up again. And like at least once a month I think about it, like, damn, I really want to read it because it's something I want to at least know more about. Even if I don't want to touch it, I want to know more about it. Like I want to know more about futures. I want to know more about blockchain technology and how it affects crypto. So I have that desire to learn, but I probably won't touch bonds until I get to the kind of money that makes it worthwhile,
Mm-hmm.
So, anyway, so you have the treasury bonds, and those are the safest of the bonds in the fucking world because they're backed and insured by the United States government. Basically, as long as the United States government's extorting money out of people or small countries, you will collect your payment, and they are considered the safest of the bonds in the world, not just in the United States, in the world, and because of that, almost every asset is compared to the 10-year bond yield. So the higher treasury yield on the 10-year note, the lower that it brings the blue chips. And that's exactly what we saw from the Dow. That's why the Dow stalled in the past few months while the NASDAQ, even the S&P, continued to climb. Big blue chip dividend-paying stocks struggled against that 3% 10-year yield. Why would you put something into a company in a rising interest rate environment that pays 2.5% dividend when you can get a 10-year guaranteed 3% yield from the United States government. Yeah, you won't get the price appreciation, but you'll get that guaranteed 3%. So that is the mindset behind those sell-offs and the yield curves and all that shit. So you can kind of use that 10-year note to kind of play how the markets are going to go and all that good stuff.
Where do I buy T-bonds?
T-bonds?
I think
The T-bills?
You can buy. I've seen like a website you can buy bonds on.
The 30-year? Oh, yeah, you can get them directly through banks. You can get them through the Treasury. I forgot the site. It's like Treasury. It's like hotrates.com or something. I don't know, man. I'll have to get it. But there's plenty of them. But personally, I'd rather just own it through a broker, have it right in my brokerage account. I don't want all that side bullshit. Bullshit. And there's one more thing I kind of want to bring out about bonds, and that is bond funds.
Oh, fucking! It just makes me cringe when I hear it.
Well, they are.
Make me sick.
They're not for everybody. The best way to put it is they're not for everybody. They're for very few select people.
They should be for nobody.
I mean, retirement. If you're retired, just throw it into a bond fund, and you just collect your 3-4% dividend.
Just buy a bond.
I mean, you could.
Yeah, you should. You should buy a shorter term bond if you're thinking about doing that. Instead of just buying the bond fund, buy the bond.
You could.
There's less risk. You're fucking old as shit. You get your money back in a 5-year period. That's much better risk than the actual stock. I don't know.
Well, yeah. Well, the problem with that is that so these funds often we referred to this in an episode a couple weeks ago. The closed-end funds, they're built to sustain income for its shareholders, and a lot of those hold bonds, at least some, if not all, 100% in bonds. And the problem with that is that net asset value changes drastically as interest rates rise and up and down. And those funds buy bonds and ignore current market conditions because the purpose of that fund, let's just say, is to buy AAA or let's go single A rated bonds and higher for 3-year plus out dates and roll the exposure every year. Okay, so let's say that's the goal of the fund. They ignore market conditions, and they probably ignore a lot of fundamentals, and they buy things just because it has a single A rating or higher. And they ignore market conditions, and to me, that's something that can actually come back and haunt you, especially if you don't really understand how it all works. The bond market does not work like the stock market does. So it can be risky. To really kind of play devil's advocate, you can get a juicy dividend yield out of it, and you have the ease of entering and exiting out the position with an ETF. That's basically your only advantages.
More liquidity, I guess.
Now, here is a fun fact. I got another one for you. This one's not history related, though. A municipal bond fund, all the dividends collected are not subject to taxation. However, the capital gains and appreciation in the stock value is subject to capital gains tax. So if you bought a $15 fund and it paid that 3% dividend monthly, paid, and then it goes up to $17 and you sell it, you have to pay the tax on that $2. So I don't know.
So
personally, if you get to that kind of money,
what are you doing at 65? You buying a bond fund or are you buying a bond?
I am selling covered calls on utilities, packaged goods, consumer goods, and a couple of dividend-paying stocks.
You're going to be selling covered calls on microchips and,
DIA,
and robot companies. Yeah. UDAO covered calls.
I'm just flipping covered calls for income.
Let's just talk. Let's just throw more jargon out there.
Flip the covered call on a monthly dividend-paying stock.
Like a REIT? Oh, I couldn't do it.
Or a bond fund.
Alright, well, is that all you got for bonds?
I think that's about it. If you have any questions, comments,
are you long on bonds?
Personally, I don't have that kind of capital. Most bonds range, like good
If you
bonds,
had the capital,
are
would you buy a
5,000.
bunch of bonds? What would you buy more of? How would you break up your portfolio in bonds and stocks?
I would rather be 100% in stocks, to be completely honest. To be completely honest, I'd rather use that capital to generate income through stocks, dividends, and options. 100%. There'd be no trading. There'd be no crazy shit. I would just sell covered calls on dividend-paying stocks, and that's what I would do if I became instantly wealthy. I wouldn't have. Oh, that's never mind. I have to save that one for another podcast, or we're just gonna go into a whole nother beast. But yeah, that's about it. All I have for bonds. Is there anything you want to add at the last second?
No, man. I mean, if you're thinking about more tax-efficient vehicle, go muni bonds. Go to a
Yeah, look
city,
towards
buy
me.
it.
If you want if you're looking for like juicy yields with some pretty good safety, go with your corporate bonds. And if you just want pure safety over the course of 10 to 30 years, you want to go with your treasury bonds. 30 years. So, if you have any questions, comments, concerns, suggestions, insults, or corrections, please email us at rebeltradinggroup@gmail.com. That's Rebel Trading Group with two G's at gmail.com. You can check us out on SoundCloud, YouTube, Facebook. Nathan, do you have anything that you are watching this week?
Yeah, I do.
What?
Ticker symbol coming in hot. Philip Morris, PM.
Mmm. And why are we watching PM?
Your boy's got earnings tomorrow.
Mmm. Are you in it now, or are you watching it?
Just watch him.
Just
Seeing how you
watching?
doing. Seeing how the cigarettes are doing.
Yeah. I wouldn't. Oh man, the put option sounds beautiful. All that doesn't it?
Yeah, it does.
Just after making that sentence, I'm like, huh? At the money put, huh?
Yeah.
At the money put, you say, huh?
Well, how much it cost?
Interesting. So, you just kind of want to watch it, see what that sector is all about. That is a
Yeah,
major.
so their revenue's been increasing. Well, I mean, it's decreased from 2014 from 29 to 26 trillion million. I don't know, thousand, so billion.
Billion, yeah.
Yeah.
It's
So it went from like 29 billion to 26 billion in 15, and then in 2017 it went up to 28 billion. So
it's a major component of the staples sector, XLP. One of my favorite funds. It's kind of boring, I'll be honest. I'm gonna put that one in the show notes. XLP Consumer Staples Fund. Yeah, that's a fun one to watch. You know that they're dividend monsters, those tobacco companies.
are they?
So, oh yeah, I think Philip Morris at one point, like not even a year ago, was paying well over an 8% dividend because there was some massive sell-off.
That's awesome.
And then, yeah, Altria, same thing, MO.
What are you watching?
You, you're not gonna hate me. You're just gonna be disappointed. You're gonna say I'm not mad. I'm just disappointed.
All
And
right,
I'm not.
somewhere.
I'm not watching a stock.
Of course you're not watching a
I'm
bond.
watching. I'm watching Bitcoin Cash.
I'm gonna throw up. We have to end this podcast immediately.
All
Cut
right.
it. Thank you
Cut it.
for coming. We'll see you probably maybe on Friday, maybe next week. Have a good one. Why are you watching Bitcoin Cash?
She took a beautiful sell-off this afternoon,
It's just fucking. It's
and I
just
caught all of
traders.
it.
It's trader fodder.
Dude, I'm about it. I'm about it.
It's
Anything,
all
dude.
trader
If you're a
fodder.
trader, if you're a sorry about that. I had to take a phone call. I am watching Bitcoin Cash. I'm in it to win it, baby. Um, she took a nice dip this afternoon. Took a solid dip this afternoon in the aftermarket hours, and I caught all of it. So I'm going to continue to watch her. I'm going to sell her soon, hopefully. But I just want to see what she does. She's acting a little bit adversely to the other cryptos. So
Bitcoin
I'm about
Cash.
it. Bitcoin Cash, ticker symbol BCH.
You know, if you
Not to be
go,
confused with the Bank of Chile.
if you go to, it's funny. If you go to Bitcoin.com, it highly promotes Bitcoin Cash.
Why is that? I'll be honest, I'm not familiar
The
with
owner of the site is the creator of Bitcoin Cash. That's it.
He owns the Bitcoin site.
He created.
He kind of like stole the.
Well, there's Bitcoin.net, like where you can buy the actual Bitcoin, or Bitcoin.org, I forget. Hold on. It's Bitcoin.org is the website.
And you can do what with it?
You can buy like Bitcoin from Bitcoin.org, and you can buy it from Bitcoin.com too. But Bitcoin.com is owned by Roger Ver, who created Bitcoin Cash. Yeah. So if you go to Bitcoin.com, it's like highly promoting Bitcoin Cash.
Interesting.
Mm-hmm.
I'm actually looking right now. I'm on the Bitcoin site. I've actually never been there. It's kind of weird. I almost forget that there's actually a Bitcoin like company. Like there's programmers and stuff that started this.
Mm-hmm.
But it's not a company. It's weird. It's a weird thing. So anyway, I think it's time to wrap it up. It's been a good podcast, man.
Yeah, bud.
Where can they get at us?
Email us at rebeltradinggroup@gmail.com. That's rebeltradinggroup@gmail.com with 2 G's. Hit us up on YouTube, /Rebel Trading Group. Is it Rebel Trading a podcast?
I think it's just Rebel Trading Podcast. You can just search for it. We're both. We're
on
there.
SoundCloud. We're there. We're around the interwebs.
We're on the SoundCloud. If our newest 4 episodes are always on SoundCloud. If you'd like a full archive, of all of our fuck, dude. One more time. If you would like a full archive of all of our podcasts, they are available on YouTube, free to you, and they will always be there. For you. For you. Just for you. Just for you listening.
Yeah.
Wink. I know who you are. Wink.
Hi, Mom.
Anyway, I think that's a good podcast, man. I hope to talk to you very soon, and may the earnings gods be ever in your favor.
See you later.
Deuces.
Bye.
Romantic, isn't it? Shut up and sit down.